Well, imagine growing up in a single parent home on a tight budget. The principle of saying, like, strictly enforced household. You couldn't grasp the concept of saving, and you would prefer buying a pair of Air Jordans or some video games or systems, and parental lessons, they now prove more beneficial to you. It's always that scenario that happens until you get to a certain age. You look back and saying, wow, I wish I wouldn't have done that. And then everyone says, man, I wish I would have saved more now. The quicker I could have retired. Well, you just have to get reintroduced to the concept of saving and retirement planning during your time while you're working earlier. See, when you first start your jobs, when you have hopefully you guys have a intern orientation, and at these companies they speak briefly about the importance of 401k investing and retirement planning. Even though you're not eligible to invest as an intern into the company, you were eligible to invest in the company's stock through the shareholders program. And after interning with a company for a couple of summers, you've invested a total of about at least $3,000 in company stock and reaped about $700. And I'm just using these figures, as an example. But see, things like that will help you realize growth and potential because you get to see it up hand. And more companies need to start, I believe, diversely informing their employees of, the opportunities that are out there in front of them. And someone asked me, what if I got debt? I say invest even when you have debt. After graduating from college, I knew this guy named Tyus. He was a law student. He was in Washington University, I think, the one in St. Louis. And the thing is, my other friend, April, both of them had big student loan bills for about, a lot of money. This is regular for recent graduates. Retirement is placed on the back burner then. But when debt and new living expenses, but competing demands on a paycheck, these people, they basically, they just went out there and knew that their retirement savings didn't have to suffer while they paid down their debts. Because basically their fathers or someone else informed them that there's different ways of looking at your 401k. It wasn't money that you'll be missing out on, but actually it would put you in a lower taxable income bracket and would be compounded over the years. You see, people don't realize that. People think they're missing out on that money from their paycheck, and they're so focused on the 401k money that they don't realize the tax advantages of having 401k plans. Since now that they work at a firm, and now they max out their 401k each year, contributing the maximum allowed by the IRS, which is $16,500, which her company matches 60 cents to the dollar to her contribution. So I look at this because a lot of companies didn't have 401k plans set up, automatically payroll deductions. But now, through all her contributions and everything else, both of them basically, Titus and April, they got about $66,000 basically with the 3% match from their employer. That's in the IRA. So these are just examples of other people's lives and things that they went through to try to show you guys and open the door that, you know, this is something you could still get done even while you're in debt. Invest, invest, invest.